I think in our view, I think RBA needs to go much harder. I mean, we still see inflation in the 7s and we've got wages in the 3s. What we are basically, our real wages are going backwards. And, inflation is basically a tax on everyone. And, our living standards are going backwards. So inflation, I think the RBA needs to tackle inflation, and their current view of returning inflation back to 3% by 2025 is, a fair way into the distance. And I think they need to bring that down faster. Especially when you consider 70% of the CPI is services in Australia, and wages feed into that. And, when wages get out of control, they become very sticky, very ingrained, and that's when it's very difficult to tackle. So I think, RBA has this window and they need to get inflation down fast.
Before we start talking about, the equity implications, are you suggesting that the RBA has been far too pragmatic in its approach? Because you wouldn't necessarily be the only one at all.
Yeah, look, I think it's obviously a difficult job for the RBA. They need to be data dependent, need to slow down the economy in a measured way. So I think, up to now, I think they are doing the right thing, but I think it's too soon to put on the brakes in terms of the rate rises from here when inflation's still running in the 7s. So I think they, we're only, across reporting season, seeing pretty strong, the economy held up very well. And when you got unemployment at 3.5%, if you want a job, you can get it, basically. So it's a very healthy starting point for the RBA.
I suppose in some respects, I've just got to mark the fact that we have seen the ASX kicking up by around about 50 basis points on the back of that. But what are your expectations moving forward when it comes to equity markets? Because, we almost topped out at the record highs around about a month ago. We've seen that retrace quite considerably. But then there's two camps. Some are believing that, you can ride the flat line for the ASX 200 because there should be a little bit of resilience in pockets, particularly in, for example, commodities in some respects. But on the other, there's going to have to be a point where the consumer is going to break down in Australia because it's not as resilient as, say, for example, the US when you're looking at savings rate and just the mortgage debt, right?
Absolutely. I think from where we are, equity markets look pretty toppy, especially if you look at, earnings yield versus what you could earn in the bank. You could get almost, 4% in the bank now, and your earnings yield just running a little bit above that. So I think the equity market's actually quite complacent at this point, considering the RBA trajectory and the slowdown of the economy that we ultimately will have. So we're quite cautious, I suppose, without being too cautious, because Australia is quite well placed to weather this slowdown, but we are cautious given the market's resilience since January.